We can knock down that old house, split the lot in two, make sure both sides are serviced like I did it. But then we can sell service lots. We don't have to actually build, or we can go all the way through and build that fourplex. So there's all these entry and exit points in development that makes us all much powerful and more flexible investors, because we got more tools in the toolbox now that we typically do just with flips and rentals and Airbnb.
Welcome to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owners Association, where real estate investors have found success since 1968. I'm your host, Brian Hamrick from Hamrick Investment Group. This episode is sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com. And RCB and Associates, helping real estate investors and small business owners navigate the complex world of health insurance and Medicare benefits at rcbassociatesllc.com. Hello and welcome to episode 448. Today, we're going to talk about real estate development and how you might benefit from this strategy. Darcy Marler is the author of Land Development as a Profitable Investment. And today he's here to share why he believes development is the next big thing in real estate investing. Darcy is a seasoned professional with over 22 years of diverse real estate experience. He's done everything including small to large land development projects, short and long-term rentals, and successful fix and flip ventures. Darcy, welcome to the show.
Thank you so much for having me.
What brought you to real estate development, and why do you think it's the greatest thing to go with in real estate investing?
So I used to be a computer guy back in the 90s, and I just got burnt out, didn't want to see a computer again. And I'd always been interested in real estate. So about 2001, so like 23 years ago, I started to get into flips, and then, the odd flip wouldn't sell. So all of a sudden you're a landlord and renting. And so over the time, I've just tried everything, right? So long and short-term rentals, flips, spurs, condo conversions. And then I started to do some new construction and development. And I just like this a lot better. I've had close to 1,000 tenants in my day, and that never brought me joy. So I've sold all my rentals. I just like new. Most of us were looking for those, 1950s, 1960s houses to fix up. And I just got a little tired of old and nasty. So yeah, I just like new. I like to be creative. I like to watch my vision, literally come out of the ground. I like the planning of designing houses and land development. And I just think it's the best because, I got tired of nasty. I got tired of tenants. So there you go. That's the nutshell of it.
Why don't you fill us in on your first real estate development project? What was it and how did that go?
So it was 20 years ago now. So I had a house, so just the 1950s bungalow, like ranch house, 1,000 square feet. I was going to flip it. And then the person next to me passed away. So I bought that house off the estate. And okay, now I'm going to flip them both. But I said, you know what? I've always wanted to kind of build new and see what I could do. So I actually moved both houses off, split those two lots into four, made sure all four had the utility runs and everything. And then I built 4 new homes. And I just loved it again because it's new. And so that was my first foray into it. So I didn't have any experience. I didn't know what I was doing. I always say, God protects the innocent and the stupid. I'm not sure which one I was, but I kind of figured it out. Like back then, there was no YouTube videos. There was no courses. There was no Darcy. So it just kind of seat of your pants figuring stuff out. But yeah, so this is definitely something that's doable for people that are new to the game.
Do you remember what the numbers were on that project? Because it sounded like at the end of the day, you ended up with 6 properties. If you took the 2 houses, moved them off to somewhere else, were you able to rehab those?
No, I sold those. Here's a funny story behind that. So I got the quote for how much is it going to take to demolish these 2 houses, and it was $8,000. Perfect. Guy comes up to me and says, you know what, I'll buy those houses off you for $4,000 each. So that's like a $16,000 positive swing. Oh, that's the greatest thing in the world. Sure. Moving day comes, the moving company comes, they lift up these homes, they take them away. And then at the end of the day, the moving company owner comes to me and he says, I'd have paid you $15,000 per house for those things. And I said, what do you mean? He said, yeah, this other guy, all he does is go to City Hall once a week. He pulls the demolition permits to see who's demolishing houses. He goes talk to that guy, buys them for $4, sells them to me for $15. So next time, avoid the middleman. So who knew? Yeah. So I lit it up with the 4. Yeah, there were some mistakes along the way. I didn't, one of the biggest ones was I didn't know. So I was building these on spec, which means that I'm just going to build them and then I'm going to sell them. I'm not going to pre-sell them and then have the new owner custom design everything. So I went, there was a guy about 3 blocks away that was kind of doing the same thing. I went on his website, I copied and cut and pasted his specs. Because when you do that, you have to kind of include the blueprint and the specs on the offer to purchase so that the people that are buying know, how thick the concrete in the basement is going to be and all that. So I did that. I didn't understand at the time the difference between regular stucco and acrylic stucco, right? And so it's just the difference of the smoothness, but it's a lot more money. So over 4 houses and 4 detached garages, it was about a $40,000 mistake that I ended up paying for that. So I made some money, but less than I should, because it was kind of my first foray into this. I didn't know what I was doing, but yeah, it's lessons learned.
Were you truly just figuring it out as you went along, or did you have any sort of coaching or other examples that you could work off of?
My realtor was a flipper and had done some stuff. So he would kind of, okay, now do this. And I'd go off and do that and come back. Okay, now what next? He'd tell me to do. So it was, that was about all I had, because there was no books. Even today, there's hardly any books on new construction and development. And certainly, like I said, no YouTube or no internet. No courses, no nothing. So I was seat of the pants. It's the good thing about it is it's linear, right? Like you have to get your permits first, and then there's the ground preparation, and then you're going to build the house. You obviously have to do the foundations before the walls, before the roof. So at least it's linear. That helps a lot.
So there's a formula and a system you have to follow that kind of keeps you within the guidelines.
Yeah, and I also, what's great about development too, and why I think it's the next big thing is so much of us. We're all kind of going after the same property, right? Like, because we've been taught over the years, I got my first book given to me when I was 15 on real estate, over 40 years ago. And so I've been watching real estate education since then. And all we're taught is flips and rentals, and lately Airbnb, rent to own, whatever. But we're taught the values in the building, right? We got to improve the building. We get rich by value adding the building. And with our aging inventory, the average lifespan of a wooden structure in North America is 70 years. Brick is 90. So that puts us in 1954 and 1934. So why are we fixing up those 1910, 1920, 1930s buildings? Because that's all we've been taught, right? But it's time to tear those down and come back with, duplexes and fourplexes, higher inventory, higher density on the same land. So how do you take advantage of land? Because more and more of the value's in the land and not the building. So there's different strategies that development has. For example, I can just change zoning and density of a parcel and sell that, right? And it doesn't have to be 20 acres on the outskirts of town. It can be like a 30, 40, 50-foot lot in the inner city, right? It can be a vacant lot. It can be, like I said, a 1910 tear down. And, we can get the zoning and density changed for that old house to be a fourplex, let's say. And we've improved the value of that lot. So now that has value to sell to somebody else. We can have our architect design a fourplex, get the building permit approved. Now we have a shovel-ready parcel to sell to a builder or another investor. Or we can knock on the neighbor's door and buy that one too, like I did, right? So now you got a land assembly. You got 250 footers, you got 100 feet. What can you do with that? We can get the blueprints ready for a small multifamily apartment or side-by-side townhouses. We can then sever, we can split that 100-foot lot into 333s or 425s or whatever. All this without doing any work on site. This is just kind of the paperwork bit. So in and out quick is one of my favorite sayings. We can go the next stage. We can knock down that old house, split the lot in two, make sure both sides are serviced like I did it. But then we can sell service lots. We don't have to actually build, or we can go all the way through and build that fourplex. So there's all these entry and exit points in development that makes us all much powerful and more flexible investors, because we got more tools in the toolbox now that we typically do just with flips and rentals and Airbnb.
A lot of the things you're saying, they're really creative strategies to deal with land and houses that you may not want to rehab, that you might just want to remove and build new. The process is different around the country. I mean, you have to go get approval to do a lot of these things. Some communities are more and more open to that because they understand there's a housing crisis and a need for more housing. But a lot of neighborhoods and communities are very much against that. So how do you navigate that world of actually working with the municipality to get a lot of those creative ideas that you have across the board?
Part of getting into this world, typically if we're in flips or rentals, our natural instinct as investors is just, let's go to MLS and let's look for the next property. We're always in finding mode. We got to take a step back. We got to learn some new stuff. What is zoning and density? What is highest and best use? How do you increase the value of land if land's the big deal? So we got to do a little bit of that. But the next thing, to your point, is geography. Because there's How it's done is basically the same. The idea of bylaws and it's all at the local level. It's not a state or a federal thing. So the local level, that they're doing the 10, 20, 50-year growth plans. They're the one that take the application. They design the bylaws. So some are, 2 months to get your zoning change approved, and other places are 2 years. In general, it's the same, but basically what's the difference is just the level of bureaucracy and how pro or anti-development they are. And there's everything in between as well. So as what I say to new investors is, let's not play in the place where it's going to take 2 years. We want to be in and out quick. So let's work geographically where things are better. So part of our upfront learning is, what places, what counties, what cities close to me are better to invest in than others. It could be that my town is a great place. It could be that my place really sucks, right? But, 40 minutes up the road in another city could be entirely different, or across the highway in another county, life could be totally different.
How do you determine that? Like if someone listening to this says, hey, I really like what Darcy's saying, I want to give that a try. How do they determine right off the bat whether their community is a good community to do this in?
In the rental and flip world, we talk about driving for dollars, and we're going to go and we're going to look for houses that are tall grass or shuttered or whatever. In this world, driving has a different kind of meaning. I'm looking for precedent. So as I go through a community, is there new stuff being built? I'll give you an example. On paper, there's a neighborhood. It might be perfect. It might be full of 1940s houses with 50-foot lots. Oh my God, this is great. This is exactly what I'm looking for. I drive that neighborhood and there's nothing new at all. Maybe the odd flip, but nothing new. Okay, so that tells me that the NIMBY crowd is the not in my backyard crowd is probably pretty strong there. I go to another community. Oh, there's all kinds of new duplexes and townhomes and fourplexes and all kinds of new activity going on. Okay, now I know that this community, because it could be that your city is pro-development, but individual communities or neighborhoods aren't, right? So there's kind of that two levels, but driving around is a pretty good way to know, is my specific city.
You can see the evidence on the ground of what's allowable in the community just by seeing what work has been done over the past couple, decade or so.
Yeah. And, a quick call to the planning department, potentially, let's say you've find a 1910 tear down, here's the address. Can I turn that into a fourplex? Yes or no? If no, is it possible? What do I have to do that? Well, you just can't. Okay. So some calls to the planning department will tell you pretty quick how on board they are or not too. Because like you said, there's a lot of places, and it's getting more and more all the time because of this housing crisis. Yeah, we need housing. We need density. We can't just keep going urban sprawl where we're just kind of growing out and out and out, because it's getting way too expensive for us as taxpayers to put in the new roads and the water treatment plants and the schools, whatever. So there's a movement to kind of come back to the inner city and let's start tearing down some of those 1880, 1910 old houses and come back with new but higher density.
Unless you're in a historic district, unless you have like some sort of advice or strategy in dealing with historic districts.
No, that's part of the education too, right? Like, so I'm not talking about, in general, in my world, anything pre-1950 should come down, with the exception of things that are historically or architecturally valuable. But that's actually a very small percentage of the old houses out there. I always say, there's a ton of old crap out there that just needs to come down. That's not valuable in any way. It's just, you got these, because back in the day, 1910, 1990, the bungalows were 500 square feet, 600 square feet. They're just tiny, right? So even if you fix them up, who wants to live there? Because more and more the younger kids, the younger demographics, and even me as a kind of retiree, nobody wants old anymore. Like when I sell my house in a couple of years, I'm not going to move into a 1930s burr. Everybody kind of wants new. The young kids, they want new as well, right? So that's another reason. In addition to our aging inventory, more and more people are wanting new. So that's kind of pushing a lot of this as well.
Can you explain in a little bit more detail what you mean when you say the highest and best use? What is that concept about?
So highest and best use, again, how do we increase the value of land if we think that land is the main thing and not the building on it? So there's kind of 3 or 4 aspects to highest and best use. What can you physically build? Like what I like to do is to say, let's throw spaghetti at the wall. Let's tear down that old house and what can we build? Like what's the maximum we're allowed? Are there physical constraints? What's the ground like? Is it, just sandy soil, or is it a bunch of hard bedrock? Or, physically, what can we build? Realistically, financially, what can I build? My team, what's the biggest I can afford to pay for? If the highest use is something higher than I can afford, well, maybe the play then is for me to tie it up, do the paperwork stuff, and then sell it to somebody that can actually, that's got deeper pockets. There's also what's going to be allowed from the city, right? So in this, I always say you've kind of got to be flexible in this world, in the development world. Let's say I want to build a 24-unit apartment building. That's what I want to do. Well, I have to be flexible on where I build. I have to go to where it's already zoned and allowed, or reasonably assured that if I make an application, it'll get approved. If I'm dead set on developing in this neighborhood, then I have to be flexible on what I build, because what's allowed in each neighborhood might be different, right? So that's part of highest and best use is what's realistically, what am I going to be able to build to bring the most amount of value out of that.
I'd like to take a moment to tell you about Green Property Management. Not only do they manage everything from single-family homes to apartment complexes in the West Michigan area, they also manage my entire portfolio. So I can tell you from personal experience that their unique flat fee management style is worth a closer look. If you feel that your property isn't operating to its fullest potential, then Green Property Management can help you take a holistic approach that will save you money, eliminate your headaches, and increase your net income. And if you're a property manager interested in applying Green Property Management's model, give them a call at 1-866-95-GREEN or visit them on the web at greenpropertymgt.com. If you're thinking of leaving your W-2 job and becoming a full-time real estate investor, one of the greatest costs you must consider is healthcare for you and your family. When I made this transition myself, I found the whole healthcare insurance process to be confusing and frustrating. That's why I'm glad I met Chad Creasy at RCB and Associates. Chad is a professional health insurance agent who helps real estate investors and small business owners understand and choose their best healthcare options. And best of all, his services are covered by the insurance company and won't cost you a dime. If you live in Michigan and are expecting a change in your healthcare insurance coverage for any reason, or losing employer coverage or transitioning into Medicare, then you owe it to yourself to contact Chad Creasy at rcbassociatesllc.com. Give us a real world example of where you bought a property and you were really able to push that highest and best use into something special.
You've got an old house there, tear down 50-foot lot in an area where now the city is really aggressive. Yes, we definitely want this, where 2 or 3 years ago, you might have been able to knock that house down and build a duplex, right? Now you might be able to get a fourplex on it. If you're in an area where they also allow basements, because not every place around the country allows basements, but if basements are kind of the normal, maybe you can get 4 units up with 4 basement suites. Now you can get an 8-suiter on that specific lot, right? So again, geography moves into it a little bit too, but what's the most you can get out of it? Usually, not always, but in general, the more units you can fit on a property, the better, because the cost of the land stays the same whether you got 1 new house on it or an 8-plex. The cost, some of your costs, like architectural, like let's say the architect's going to charge you X to design a duplex. Well, they're not going to charge you twice as much to design a 4-plex. So on a prorated basis, a lot of your costs don't double every time you kind of double the units. So in general, the more units you can get on, the better. So 10 units is better than 8, 8 is better than 6, 6 is better than 4. So can you look and find opportunities in your area or in where you're investing where, you can just push the limit on what's allowed, because the community or the city's really on board for higher density, and they're pushing. The other thing too is usually on higher traffic streets, like kind of main streets, you get less pushback from the community because they don't really care what's going on the main streets. And then the city also wants higher density, maybe some retail on the main floor with some residential up above, and they'll let you push the envelope in terms of units if you're on kind of a higher traffic area too. So you're looking for all these kind of opportunities to just get the most out of the land. In your portfolio, when you do this, are you building to rent, hang on to them and rent them, or are you building to sell them? I personally, like I said, I'm tired of the tenants. I've always kind of been build new and then sell. But that's the great thing too, is like I said, there's all these exit strategies, paperwork only, creating service lots and sell, or build a building and sell. But even that, let's say we tear down the old house and build a 4-plex. I've got multiple exit strategies there too. I can refinance it and keep it in my own portfolio as a new 4-plex rental. I can sell the whole building as a rental to another investor because, there's so much competition. It's so hard to find multifamily now. That's an option. You can condominiumize it. And now I can sell each of those 4 units individually. I might be able to, if I'm in Florida and I knock down a building and build a duplex. I can maybe turn those into Airbnbs or rent to own. So there's all kinds of exit strategies as well. But what do you want to do? What kind of makes you happy as an investor? And there's all these, again, it's just tools in the toolbox. Typically we got like 2 or 3 tools in the toolbox. I can do, long-term rentals, short-term rentals, rent to own, wholesaling. Most of us kind of have 3 or 4 tools. In this real estate development world, I'll put like 20 tools in your toolbox. So as you're going up to that old house, maybe flips and rentals are still the best thing to do, but maybe not. You've got all these different options and exit strategies along the way. So it's pretty powerful stuff. I really like that as well.
And in talking about all these different exit strategies, it sounds like one of the exit strategies is to buy the property and then change its use. Like what is the exit strategy there? Like, how do you make money off of just changing the use?
There's a ton of wholesalers out there, right? And wholesalers, I'm trying to find the property in trouble, but I'm also trying to find the person in trouble, right? Like I need some guy that's just about to lose his house next week. So there's, you flood the neighborhood with flyers and maybe somebody comes back, but you get a lot of negative pushback too. But it's just a flip, right? It's a buy low and sell. I'm not adding value. Well, I think there's a lot of opportunities for wholesalers, for example, in this world, if you can learn how to add value. So for example, can I change the zoning and density so more things are allowed on that specific lot? And then I can sell that increased, by allowing a builder to do more, you've increased the value of the land and now you can sell that. So maybe you can add an extra 0 to your finder's fee or 10x your finder's fee just by, taking a few months to go through the paperwork process to increase zoning or density. Or like I said, have your architect actually design that new fourplex, get that building permit approved. So now you've actually got a shovel-ready package. If it's a vacant lot or the old house is vacant, the new owner, the builder, could literally tear it down tomorrow and start working, right? So these are kind of powerful strategies. Again, you don't have to get dirty and do work on site. You can just do the entitlement or paperwork only. And I think there's a great opportunity for kind of people that maybe don't have a lot of money that are looking to get into real estate, or wholesalers looking to kind of increase their finder's fee. There's a lot of options here in the development world.
And then just to make sure that like our listeners are following along here with the logic, why is a property worth more if you change its use from, say, a single family that existed on that property or exists on that property to a 4-unit? Like what makes that inherently more valuable?
Everywhere in the country, it may not, right? Like I said, you're looking at demographics. Are people moving to this? Is my town being boarded up and everybody's leaving? Well, obviously it doesn't make sense to add more units there, but in areas around the country where people are moving to. So in general, there's not only foreign immigration coming in, but there's domestic movement, domestic migration as well. In general, if you look at kind of the stats, people are moving from the Californias, the New Yorks, the Chicagos and the Bostons, and they're moving to the Texases and the Floridas, North and South Carolina, Tennessee, where, there's less paperwork, no state tax. I can pay $3,000 a month for a little shoebox in Manhattan, or I can get a little mini mansion in Texas kind of thing. So people are moving up to other places. Well, now there's a need, right? So instead of just knocking down a house and building one, like we've been doing probably for the last 40 years, or renovating that old house. I had 1 unit before. Now I got a nicer unit, but it's still a 1950s building. If I tear it down and build a 4-plex or 6-plex, now I can start to meet the demand, the massive mismatch of supply and demand that's happening in a lot of areas of the country as people are moving around. So it's adding units to the market in an area where there's a huge supply and demand difference. That's where the profit can be made.
And going back to your first entry into doing development, you talked about the stucco siding and how you didn't realize there were different types. And the type you chose ended up costing $40,000 more. What are some of the other tips you have or tricks you've learned along the way to save money and not spend money unnecessarily?
I was always my own on-site supervisor. So look, I would be on site every day. I'd be getting the garbage bin in. I'd meet in the morning with the electrician. So I was that guy. And I don't do that. Let's think like investors. Let's, what is zoning density? Let's learn the education. Let's make sure we're in the right place. How do we find opportunities? Let's put the deal together and then delegate it to your architect, your engineers. They're going to do the back and forth with the city. And then if you are doing the strategies, we're actually doing work on site. Well, let's hire the professionals to do that. And so part of that was just inexperience. And so now if I'm actually dealing with professionals that know what to do, my role is working with the architect is to make sure that the finishing, for example, is what the community needs. It's no different than a flip or a reno. You don't want to put granite countertops in an area of town that doesn't warrant it. Same thing here. So you just got to match it. But as you're working more and more with professionals, you want to make sure that, the quality of plumbing and electrical fixtures match, the end user. But again, that's the same as a flip and a rental or a reno as well. So it's dealing with the professionals and having them thinking, your time is probably better spent as an investor looking for the next opportunity as opposed to being on site all day, every day, trying to figure out how to do this. So,
what are the professionals and different types of people you want to make sure you have on your team when you do the strategy?
So there's some new team members. So if let's say I'm just doing the paper, I'm just changing zoning and density, then I need a civil engineer, maybe a surveyor kind of thing. If I'm going and actually creating service lots where I'm either 5 or 10 acres on the outskirts of town, I'm doing the grading, the prep work, I'm putting utility pipes in the ground, I'm building a road, I'm subdividing that into smaller units and then selling those. Then you need, a civil engineer, again, a surveyor, but also now the tradespeople that are going to actually dig the trenches and put the pipes in the ground. As far as we're concerned, if we're delegating that, then really what we need is an architect, a civil engineer, surveyor, structural engineer, probably in addition to a builder or project manager, somebody that's actually going to do the work on site. So building that part of your team is fairly important. Yeah.
I know that you have training that you offer in this area. Would you tell our listeners how they could find out more about you, find out about the coaching or training that you might have to offer as well?
So I've got an online course that teaches exactly how to do that. If every building starts with grass and ends in a building, all these different steps, I'll teach you all that. Again, the basics, what is highest and best use, and all that, and how to build your team, how to find these opportunities, how to fund them. So you can just go in and do darcymarler.com, just my name with no spaces. That'll take you to the landing page, the information about the course, the curriculum, some student testimonials and student takes and action videos. Or you can just go to YouTube and just Google Darcy Marler channel and I'll come up as well. So you can start to see a whole bunch of videos that I've put together talking about just this kind of stuff.
What is your favorite hack or app?
In my world, I like PropStream, actually. So it's a good way to find off market. But also, I'm looking for different stuff, right? Most people, flippers and landlords, and these people, they're looking for that old house. If it's too nasty, we don't know what to do with it. If it's a vacant lot, we don't know what to do with it. So I'm trying to find, like I said, communities that are older, those tear downs that are really nasty. We're just going to tear them down, right? And if we learn what to do with a vacant lot, that separates us so much from the rest of the competition that are searching everybody else that read a real estate book or took a course, they're all looking for the same property. So if we can differentiate ourselves by dealing with those old stuff and tear it down or dealing with vacant lots, it helps it a lot. And so I like to find those kind of things on a PropStream.
Say that again. What is the name of the app?
PropStream. So it's PropStream. And it's basically search software. You key in the parameters of, you can do searches not only for land or anything, but you can find, pre-foreclosures and zombie houses and all this stuff. And you can opportunities potentially to find stuff off market. So it's just search software that you can drill down and see in your community, by a specific neighborhood or whatever, what's going on.
Darcy, thanks for coming on the show today to talk about real estate development. It's been really interesting hearing about your experiences, and you bring up a strategy that we haven't really, talked about on the show. I mean, we've talked about wholesaling and flipping, and we've talked about other types of development, but just looking at the properties that are on the market, the land a little differently, and figuring out the highest and best use, maybe changing the use. Really interesting stuff. So thanks for sharing it with us today.
Appreciate it. I'm a little bit of a prophet or an evangelist talking about this stuff. Not too many people out there talking about this stuff, but I think like I said, I think it's the next big thing because this allows us to kind of, everybody's having so much trouble finding stuff to cash flow, or it's getting expensive to do flips and Airbnb. There's government intervention now, so it's just getting harder and harder to do the traditional strategies. So if we kind of move to a different sandbox, I think there's a lot of opportunity.
Fantastic. Thank you.
Of course, thank you.
I want to thank everybody for listening to this episode. I'm your host, Brian Hamrick from Hamrick Investment Group, and you can find out more about me by going to higinvestor.com. That's HIGinvestor.com.